Members of Congress and their spouses be banned from trading individual stocks while serving in Congress?
No, I don't know to the second one. Plus, this is a free market and people, we are a free market economy. They should be able to participate.
So in mid-September 2008, when the Dow Jones was still above 10,000, Treasury Secretary Hank Paulson and Federal Reserve Chairman Ben Bernanke held closed-door briefings with congressional leaders, warning them of an economic meltdown that was going to happen in the near future. One attendant at those meetings was Alabama Representative Spencer Bachus, the ranking Republican member of the House Financial Services Committee. Bachus attended those meetings and the very next day began to make trades betting against the stock market. One stock he bet against was GE, a company that had a third of its business in the financial sector. When Bachus began betting against the market, the Dow Jones Industrial Average was at 10,898. It would go on to fall 40% in the coming months, and GE, the stock that Spencer bet against, fell a whopping 73% during that same time period. This allowed Bachus to edge out the market at a time when most Americans were seeing their retirement and financial investments take a huge hit.
It went down again.
How much are you down overall?
About $140,000.
Tell me about your 401k.
Does this answer the question?
This is what it was in 2005. 2007, you're down below 2005.
Right. Another one went down almost $40,000. One was
Right.
88,000, and then it went down to like 50.
Doing their due diligence, 60 Minutes actually tried to meet with Bachus to discuss his trades, but was gatekept by his secretary, who apparently is Buster from Arrested Development. Unfortunately, Bachus is far from the only example of insider trading in Washington. In 2009, Congress was in a hot debate over healthcare and whether or not the country should move towards a public option. So this public option, which would compete with private companies, temporarily faltered confidence in the private sector of the health insurance industry. However, if the provision failed, confidence would likely be restored, resulting in a rise in stock prices for private health insurance companies. Whether you're for or against a public option, you think members of Congress would have to legally abstain from trading these types of stocks during this debate. But in reality, members of Congress were actually actively trading these stocks during this time period. One member of Congress that was doing so was the Republican House Minority Leader John Boehner, who bought health insurance stocks days before the provision was killed off. Stock prices in this sector boomed as speculated, allowing him to rake in profits from the decision made by Congress, which again is an institution that he had a leading role in at the time. Boehner claims he makes no decisions on day-to-day activity in his investment accounts, and a spokesperson for him has said that a financial advisor makes all the decisions for him, and that Boehner only meets with him and speaks with him a few times a year. But what is a few times a year? And when is he talking with his financial advisor? Is it right before debates such as the healthcare debate? So the reality is that just one time a year is too much, and anything short of a blind trust is just open the door for corruption. Bachus and Boehner are far from an anomaly. In fact, legislators trade incredibly frequently, and the results are mind-blowing. Senator David Perdue traded 2,596 times during one term. Analyzing his portfolio during this term from 2015 to 2021, the S&P 500 beat his overall portfolio. However, when analyzing the stocks that his committee had direct oversight over, he outperformed the market by a significant margin. So how are members of Congress able to get away with this? Well, one way is by simply plastering an SP on the trade, technically making it the spouse of a member of Congress rather than the member itself. And voila, all is legal according to the Stocks Act, which we will get into later in this video. As everyone knows, spouses share finances, so this does absolutely nothing in terms of preventing insider trading. Disclosure statements from Democratic California Representative Alan Lowenthal shows that his wife sold Boeing shares on March 5th, 2020, one day before a House committee released damaging findings on the company's handling of its 737 MAX jet, which was involved in 2 fatal crashes. Of course, a member of that committee is none other than Representative Alan Lowenthal. Boeing's stock price fell 67% over the next 10 days following the selling of his wife's shares. This spouse protection sort of loophole is something that the queen of cronyism herself, Nancy Pelosi, has benefited from in the amount of millions of dollars. In December of 2020, it was reported that Pelosi and her husband had purchased between $500,000 and $1 million in Tesla stock options, just weeks before President Biden announced his plans to transition the federal vehicle fleet to electric vehicles. Tesla's stock price soared in the following months. By just a few months later, in January of 2021, the value of Pelosi's investments had grown between $1.1 and $2.4 million. And of course, those transactions marked SP on the filings. Pelosi's position on the House Energy and Commerce Committee, which oversees the electrical vehicle industry, raised questions about potential conflicts of interest, but was ultimately swept under the rug as the world's attention focused on the new pandemic. So getting back to the Stocks Act that we mentioned earlier, a great policy to prevent insider trading, right? Wrong. In fact, the Stocks Act is a perfect example of rules for thee, but not for me. The Stocks Act says that legislators have a maximum of 30 days to report a trade transaction. An analysis of over 9,000 trades made by legislators over a 2-year period revealed that the average report of a trade made by members of Congress was just 28 days, and the average delayed report was 52 days. Meaning most legislators are either not reporting on time or waiting for the very last minute to report these transactions. What's even more amazing is that according to the SEC, the punishment for violating insider trading laws is a maximum prison sentence of 20 years, maximum fine of over $5 million for individuals, and the maximum fine for non-natural persons, such as an entity whose securities are publicly traded, is $25 million. But if legislators violate the Stocks Act, they receive a penalty of a whopping $200 for a first offense and no prison time whatsoever. No matter how big the trade was, by the way. And as you can see, this minuscule penalty means that legislators violate the law all the time. The thing is that the Stocks Act was claimed to help prevent insider trading by requiring lawmakers to report their trades. In reality, it shifts the focus of if or when lawmakers are reporting their trades and away from whether or not they should be allowed to personally engage in these trades at all. In a sense, it legally reinforces their right to trade stocks while having access to confidential information that could vastly affect their trading or their voting decisions. Ask yourself this question. If a private citizen, i.e. you or me, traded a stock while having access to confidential insider information, would that be illegal? Would that act be subject to a penalty of up to millions of dollars in fines and throwing you into a cage? The simple answer is yes. But if you're a member of Congress, someone who is supposed to make decisions based on the best interests of the people and not the interests of your wallet, it's perfectly legal according to the Stocks Act. And what's interesting is that it seems that anyone with any sort of power within our government treats the Stocks Act as a regulation that trumps any sort of SEC insider trading regulation, and therefore these trades are technically legal under our system. Whether you want to make that argument or not, the biggest takeaway from all of these examples is that if it's illegal, they're getting away with it, and if it is legal, it shouldn't be.
Should you be allowed to participate in the stock market when you're influencing the direction of the stock, or when you know which direction something's going to go in, or when you're going to pass a law that's going to benefit these businesses, that's going to force the stock to go up, and you know that, so you invest a shit ton of money before it happens? That seems
if
like
no
it's
one
a
else is
problem.
allowed to do that.
That seems like it's a problem.